Yeah, K-Fall says you've been doing a poor man's cover call on silver. It's working well. Yeah, I've been thinking about doing something in silver because I haven't traded it lately. I've got FCX, which is kind of a copper play. I've got GDX, which is kind of a gold play, but I don't have anything in silver. I've thought about doing something in SLV, the silver ETF. IV rank is low. So yeah, typically I'd go sell a strangle. That's typically what I do in SLV when I play it. Don't really have a directional assumption right now. Obviously it's near its all-time highs here. You think it's still got some room to run to the upside? I don't mind the poor man's covered call. Could go to the 92-day cycle by the 83 delta call for $4, and go to the front month, the 28-day cycle. Could sell the 31 delta call, which is 31.5 strike. You'd pay $347 for that. We'd have to do multiple contracts. It's a very tiny trade, but realistically, you'd be looking at making, somewhere around 60, 70 bucks max profit, possibly $100 if it had a big run. But you'd probably have to do 2-3 contracts, to make this thing worth trading. Probably 3 contracts. That gets your buying power of about $1,000. You're paying $1,000 debit for the trade, mainly for the 3 long calls here. And now realistically, you stand to make, $250 max profit. Realistically, you're going to take, 50% max profit, 120, 140 bucks. Assuming you get the direction right. How about a short call on Tesla to play the downside to 230, 226? Short call on Tesla would be an extremely risky thing to do. Yeah. Yeah, I don't mind selling. I do a lot of strangles, which have a short call component to them. But I have never in my life have I ever sold a strangle in Tesla. I don't recommend that. I don't recommend it, especially on the call side, but I also don't recommend it on the put side either. I guess you see the kinds of moves Tesla makes. Look at this chart, right? This chart does not scream strangle, right? This chart screams out, please don't sell strangles, right? You're gonna get killed. You're gonna get murdered on your calls when it does stuff like this. And then, you're going to get murdered on the puts when it does the opposite. And right now, after this big sell-off, the last thing I want to do is start loading up on short calls. If you really want to be directional and think Tesla, is going to zero from here, short calls, I know they're priced nice. They're juicy as far as the premiums. I'd rather buy puts, right? I'd do a defined risk trade. Don't do short calls here. Because Tesla is one of those stocks. We're about to get back into earnings season here. This thing literally, it would not be unusual for it to be trading $100 higher than where it's at now in a month or 2 months. Matter of fact, we can actually go to the 57-day cycle. Let's go to the kind of cycle we typically trade. 235 is where it's currently trading. The 335 call, 100 points higher, is 12 deltas. So the market's telling you there's about a 12% chance that Tesla could actually make that $100 move up, right? Now, in this case, if you're selling that call, that's not bad, but you were selling something, down here, the 30 delta call, and Tesla made that $100 move up. Well, now you'd have $55 of intrinsic value if it made a move all the way up to 335. That's a $5,500 loss per contract, right? I don't mind selling short calls on things that are the boring stocks, low volatility, things that typically don't have a history of moving. The really high beta stocks, things like Tesla. Things like Coinbase. Yeah, I can't sell calls on those things. I've seen the way they move. Yeah, it's just not for me. I don't have the stomach for it. Nike has an IV rank of 83. That is very high IV rank. Right now, Nike is trading been trading kind of in a range. well off its highs. I mean, it was trading all the way like $123 a share about a year and a half ago. Now we're only trading at $72 a share. So what will we do here? IV rank at 83, IVX in the 57-day cycle of 43%. That's pretty good IV for something that's not a tech company, right? I mean, it's manufacturers clothes and shoes, right? That's pretty good IV rank and pretty good IVX. Typically, when you have good IV in something, your first inclination should be to sell some premium. And the best way to get a premium is to sell both sides. So typically, I would look for either a strangle or an iron condor, depending on how much risk you want to take. I could sell the 60 put and the 87.5 call. Both of those are 11 deltas on each side, so pretty far out. But still, because of the IV, $131 credit on a buying power reduction of only $722. It's pretty good premium. Let's move to MU. Let's see if MU, go ahead and put something on it. IV rank of 59, IVX of 57%. Go with a 57-day cycle here. And this one, I was going to sell a strangle in this one because it's a tech stock. It's got much higher implied volatility percentage. Yeah, that's a 7 delta put. Hey, don't laugh at me, guys. That's the 8 delta call, the 75, 145 strangle. But hey, you get $153 credit, buying power reduction of only $1,000, and you are way out of the money on both sides. And on the put side, I mean, are you really worried about that $75 put? I mean, I don't really want shares of Micron, but if I could get it at $75 a share, okay. And I'm less concerned about it making a $40 move up. I mean, that's a crazy move. Could it really move $40 up? I mean, it could, because I mean, these things are priced like there's an 8% chance that these moves could happen. But it seems like a pretty safe bet to me. Bid-ask spread on these are quite a bit tighter. 5 cent wide on the puts, 5 cent on the call. Yeah, I'm going to see if they'll give me 154 credit on that. No, they want 153. Well, I'll take it down to 153. They don't want to give me 153 on it. I'm going to give them up one more dollar. That's the last dollar they're getting from me. 152. I'm just going to let it sit there. That'll probably eventually get filled, though. Carnival Cruise Lines reports in the morning. I do trade this on occasion. It's pretty liquid. Had a recent high of 28.72, currently trading at 21.32. Let's see, the 57-day cycle here has a lot of open interest. The bid-ask spreads are good. 4 or 5 cent wide bid-ask spreads. So the 12 delta put, 12 delta call, that's the 17 put, 27 call, 52 cent credit, $220 buying power reduction. You know what? We're selling 3 contracts of that. That's 156 credit, $660 buying power reduction. All signs point to go on that.